Hi, everyone. Welcome to our webinar. Thank you for taking the time out of your busy day to join us. We are so glad you're here. I just have a couple things before we get started. If you called in by audio only, we encourage you to join us on another device so that you can also view the presentation. This webinar is being recorded and the recording will be made available on the aleragroup.com website as soon as possible. Please be sure to post any questions in the Q&A section on your screen so we can get to those towards the end of the presentation. A link to download the slide deck can be found in the chat section in just a moment as soon as I hit that enter button. With all that said, I can hand things off to Charnel to get us started today.
All righty, thank you so much, Caroline, and good afternoon, everyone. I am Charnel Devona, an account executive with the Propel Insurance in the Tacoma, Washington office, and I welcome you to our Builders Risk presentation. Your presenters today represent a vast and varied accumulation of knowledge and expertise in the world of Builders Risk. Diana Hancock has been in the commercial insurance industry for 11 years, 3 of which have been devoted specializing in Builders Risk. And coming up on her 1-year anniversary here at Propel, she enjoys guiding and educating her clients. Carol Slagswall has been in the insurance industry for more than 25 years. Joining Propel 14 months ago, she manages large construction accounts primarily in the Southeast. We truly appreciate her different regional perspectives and the added technical expertise she brings to our team and to her clients. Lori Seeger has been in the commercial industry for 32 years, with the past 19 years dedicated specifically to Builders Risk. She began with Propel in January of this year, bringing her expertise and experiences to strengthen our team. To get us started, Diana will review our agenda.
Thank you so much, Charnel, and welcome everyone. So today we're going to be talking about some basic things and then wrapping up with our market challenges. So we're going to be talking about what is Builders Risk? Why should we purchase it? And who should be the one who buys it? Who should be named insureds? What property to insure and what property not to insure? The controlling documents of the Builders Risk policy, construction contract best practices, and again, the current market challenges. So what is Builders Risk Insurance? Builders Risk is a contract between the named insured and the insurance company. The goal is to transfer the risk of accidental physical damage to the work from the owner, general contractor, and subcontractors of every tier to the insurance company. Basically, it's first-party property insurance that protects a project during the course of construction or renovation. By transferring the risk to a policy, you're securing the financial resources so the project can keep going after a covered cause of loss. You know, the alternatives are a delay, stoppage of work, or a lot of finger pointing, trying to figure out who was to blame for the loss, and you don't want to have that. So why should you purchase it? Well, unfortunately, you can look at the slide here and see one of the reasons. You know, things happen on a construction site, whether it's a fire, accidental water damage, theft. Unfortunately, we need to ensure that your project will continue with the policy. Who should buy it? Well, it's an owner or a developer or the general contractor that usually buys the insurance policy, and it would be defined in the construction contract. Next slide. Okay, who should be named insureds on the Builders Risk policy and why? This is absolutely my favorite thing to talk about, and I think I talk about it almost every day. The named insureds on a Builders Risk policy need to be the owner, the general contractor, and the subcontractors of every tier. This allows for equal rights and equal coverage under the builder's risk policy. When that's in place, when all of those named insureds are there on the policy, the insurance company will not be allowed to take legal action against the owner, general contractor, or any sub to try and recover money that they might have paid out for a loss. Now that's called subrogation, and Lori is going to talk about that a little bit later in our presentation. But now I shall pass the baton on to Carol, where she's going to talk about property that should be insured on the builder's risk policy.
Thanks, Diana. Well, first of all, I want to explain that there is no standard builder's risk policy. There are no standard policy forms. There are no standard coverages. The builder's risk policy was designed to be specific for each project, and that's why it was designed to be adaptable in that way. But there are two basic categories of coverages. I'm going to call these hard costs and soft costs. Hard costs are going to be any work that's included in the construction contract. And that's going to include materials, equipment, supplies that are going to become a permanent part of the finished project. That can include machinery and equipment, as long as it's going to become a permanent part of the finished project. Sometimes you can even include owner supplied property. In the example of a building that's going to be used as a restaurant, the owner may purchase restaurant equipment separately outside the contract, and that can be included under the builder's risk policy as well. It just needs to be added to the limit. The other category of coverages is called soft costs. We'll call these soft costs. And these are more consequential costs from the result of a covered claim. I'm going to give you an example. If a building were partially burned and the contractor was going to try to build back, they may need to hire an architect, an engineer, to come and look at the portion that was not burned to make sure that it's still structurally sound. That would be an extra cost that's associated with this claim. Also, there may be permits that have to be extended. That would be an extra cost that's associated with the claim. Builder's risk policies would probably have to be extended as well. That would be extra. Leases, if this is an office building or an apartment building, leases may have already been negotiated. In order to renegotiate those, because the time is going to be longer now to finish the project, that would be extra. And there may even be loss of rents. That also could be included as a soft cost. And that's a limit that you come up with your agent, and they will send that to the insurance company, and the underwriter will quote for that, accordingly. Now, let's talk about what isn't covered under the builder's risk policy. Basically, anything on the job site that is not to become a permanent part of the project. That would include your tools and equipment, for example, your forklifts, your bulldozers, that kind of thing. Those are better covered under the contractor and subcontractors' property policies. Contractors' tools like saws and drills and any kind of specialized tools, those are also all covered under a contractor, subcontractor's property policy. Any vehicles at the job site, those are going to be covered under the contractor's auto policy, of course. And I can give you an example of this in the case of, let's say, theft at a job site, and the thieves steal copper and employees' tools and that kind of thing. The copper, because it's supposed to be a permanent part of the finished project, would be covered under the builder's risk. And the tools for the contractor, that would be covered under the contractor's own property policy. So, and that's kind of how you can sort of figure out which policy would respond. Now, existing structure. Typically, an existing structure is covered under the owner's permanent property policy. It is possible in some cases, in the case of a renovation, to cover the existing structure under a builder's risk policy. But the limit for the existing structure needs to be more incidental to the policy limit. In other words, the limit for the existing structure needs to be less than the limit for the actual construction project. And in this tight market that we're in right now, it's getting more and more difficult to include an existing structure under the policy, but there are companies that will still do it. When you are putting together, or when you're working with your agent to put together your builder's risk program, there are some controlling documents that you're going to need to consider. Number one is the construction contract between the owner and the general contractor. This is what we call the prime contract. And in that contract, you're going to find a number of things that are going to dictate the parameters of the builder's risk policy. The cost of construction, that's going to be part of the policy limit, of course. If it's a standardized contract, the perils to be covered would be found under the builder's risk portion of the contract. And I'm talking about fire, theft, lightning, collapse, wind, hail, earthquake, whatever is decided upon to be insured. Also, the policy period, the timeline of the project is going to dictate the policy period as well. In the case of a project that's being financed, the lender requirements are going to have to be considered. The lender, you would like for the lender requirements to be similar to the construction contract requirements, but sometimes the lenders will ask for other things. For example, the contractor and the owner may not want to insure for flood, but the lender might say, oh yes, I want you to insure for flood. So that would be considered. Sometimes the lender will not agree to the deductibles that were arranged by the contractor and the owner, and the lender may want lower deductibles. I've definitely seen that happen. So that just has to be considered when you're putting together the program. And then finally, in the case of, let's say, a tenant upfit, the lease requirements with the tenant and the building owner might have to be looked at. The building owner may have specific requirements for a tenant who has a construction project. I'm going to hand this over to Lori because she's going to talk much more about the construction contract and how that contract is supposed to closely align with the builder's risk policy. There you go, Lori.
Thanks, Carol, and hello, everyone. Thanks for being here today. So I want to talk about what is going to be defined in the construction contract. The first one is who has an insurable interest. Any party that has an stake in the policy would have an insurable interest. That would include the owners, subcontractors, and subcontractors of every tier. And they would be included on the builder's risk policy as a named insured. And who should purchase the policy? We always like to suggest that our clients purchase the builder's risk policy, and in doing so, we do that so we can ensure that we are meeting your insurance requirements and we're providing the best possible coverage for you. Now, we know that you're always not going to be the party providing the coverage. So if another party does purchase the builder's risk, we can go ahead and review that for you if you would like. How long should a builder's risk policy be in place? In a perfect world, we want to see the builder's risk in place from the project start date to final completion. Now, if you have lenders, contractors, the contractor's contract allows it. Otherwise, we can do it when vertical construction begins until substantial completion. That is something that can be project specific, and you may want to talk to your broker about that. Perils to be covered. You should have builder's risk, all risk insurance. And what that is that provides coverage for all perils except those that aren't included on the policy. We also suggest you do earth movement and flood. And if you're in a coastal area, we recommend named windstorm. And then we want to include transit and offsite storage coverage also. who's responsible for the deductibles, that's going to be listed on your contract, or it could be, it's not always referenced, but you'll want to define who is going to be responsible for the deductibles of a covered cause of loss. Financial strength requirements of the insurance carrier. This is something that also can be listed on your contract. We just need to be made aware of that. So when we go to market to obtain quotes, we only go to carriers with that AM Best rating requirement. Waiver of subrogation provisions. This provision prevents the parties to the contract and the insurance company from seeking reimbursement for any insurable losses. It includes the owner, contractor, and subcontractors of every tier. I have seen it in the contract where they also require the architects. I would recommend that you do not provide waiver for the architects, and in this way, you will preserve your right and the insurance carrier's right to seek reimbursement for covered losses that were the result of an error in design and plans. The last item is just the lender's insurance requirements. You want to be made aware of that if there is a lender on your contract, because they most likely will have builder's risk too, and we will want to take a look at those requirements to make sure we meet the lender's requirements also. I want to go to the next slide. Now we're going to talk about the builder's risk checklist, and this is really short and sweet. We actually have a builder's risk checklist here that everyone attending the webinar will receive from us through email, and you can use that checklist to review a builder's risk policy that has been placed by another party, and that'll help you determine that they have all the coverage that we would suggest be included on the builder's risk policy. And the last thing I want to talk about is the current market challenges we've been seeing to date. The big one right now is frame construction. Right now, there's been numerous frame losses in the last 5 years or so, and they've been extremely large. And this has been causing carriers to either back out of providing builder's risk coverage, or they're reducing their limit significantly. So with that in mind, the underwriters are taking a closer look at all wood frame projects, and it can take significantly longer to get the quotes from the underwriter. So we just want you to be aware, if you have a large frame project, you want to give us as much time as you can on that. And then the next issue is water mitigation. There's also been numerous large water damage losses. So this is causing the carriers to increase their deductibles. An example of that would be, you'll have a policy deductible for $10,000, except for water damage. And we're looking at deductibles at this time, potentially of $100,000 and above. Again, that's going to depend upon the project size. So that's just an example. It's just so you know that they are quite a lot higher than they used to be. And job site security, underwriters on larger projects, again, they are finding that they're going to want more job site security than ever before. We have the standard requirements that the site needs to be fenced, locked, and lighted, but we're also finding that they may require a watchman during non-business hours, and then they might also require a monitored camera system. So you'll just want to be aware of that in your planning stage, so you know to put that extra cost into your budget. And then because of all the challenges and because the carriers are being overwhelmed at this time, it's very, very important that we provide as much detail as possible when we request submissions. So what we like to see is a completed application, the geotech report, construction budget, and construction schedule. If we give all that to the underwriters, then there's higher possibility of them actually taking a look at our request and actually providing us a quote that's in a reasonable time period. Now, Carol has more experience than I do on coastal issues, so I'm going to turn it over to Carol right now to help you with that.
Thanks, Lori. I do have experience with coastal issues. That's not always fun. First of all, I want to say this is very timely. We are right in the middle of hurricane season. The peak date of hurricane season was September the 10th. So we're right in the middle of it. Because of the catastrophic nature of coastal projects, there are very few insurance companies that will even look at a coastal project. They're getting fewer and fewer every time we have more and more disasters. However, we still have some, and they're going to be very picky about the ones that they select. And there are about 3 different categories of what they're going to look at when they're looking to write a project. First is the location, of course. We're going to break that down. There's beachfront, and that's going to take the hit with the storm surge and the wind the most. There's seacoast, that's back a little bit from the beach, but that's where you'll get your spawn tornadoes and your excessive rainfall. That's definitely a risk. Even inland properties are being looked at, because if you are a state that borders the coast, it is possible with a big storm, you're going to have some damage inland. So the insurance companies know that. They're taking that into consideration. The construction of the project is really important. There again, frame. It's going to be very vulnerable to a hurricane. So that's going to be, they're going to get some rate for that. Masonry non-combustible, they're going to be more comfortable with those kind of projects. So the construction is going to matter. And then the third thing, which is the most tricky, is the time of year. And what I mean by that is, at what phase is that project in construction during hurricane season? So for example, if we were to have a 12-month project for a new construction that begins today, this hurricane season, there won't be much exposed, not much at risk, because we won't have a chance to build that much in this hurricane season. But next hurricane season, at the 12-month period, we will have almost the entire policy limit at risk. And the insurance companies are going to make sure that they rate for that. Not only will the premiums be higher for that, but we can also see larger deductibles. Deductibles on windstorm can range anywhere from 1%, 10%. Deductibles on flood, they're usually flat deductibles, but they usually start at 10 grand all the way up to $1 million, depending on what high hazard flood zone you're in. There could be sublimits. The insurance company might say, okay, it's a $10 million project, but we're only going to offer $5 million for windstorm. So those are some things to consider when you're building at the coast, some of the concessions that you're going to have to make with your program. Now, the one thing that we do for our customers, and we recommend this, is to look ahead. So for example, if I know that I have a construction project that we're insuring that's going to end in, let's say, July, and with supply chain logistics, it could have to be extended, I would be right in the middle of the beginning of the peak hurricane season. So I would want to possibly negotiate a rate for that extension on the front end, on the year before maybe, or at the beginning of the policy period. Some underwriters can actually do that and commit to that. And limits are important. If I know I have a project that may have a second phase or is going to have some large change orders, I need to make sure that that insurance company can accommodate that increased limit. The insurance companies have very strict rules about how much they can insure at the coast. So you don't want to be caught in the middle of hurricane season trying to negotiate extra limits or extra time on this. So that's just something we recommend. It's worked for us so far. And that's really all I've got to say about coastal, unless there's any questions.
I don't see any questions, Carol, about coastal, so
Okay.
not yet, maybe.
So sorry, I was on mute. Hey, thank you, Carol, Diana, Lori. Sure appreciate your time and your expertise and your perspectives. And before I open it up for questions, I wanted to alert everyone to some of the upcoming webinars that we have. On October 18th, we will be presenting on contractors pollution. And then in the works, over the next few months, will be a session on property and real estate insurance and another on contract review and compliance. By joining today's webinar, you should be receiving an invite to these future opportunities as well. So if you have not done so already, please put your questions in the Q&A. We'll also take a look at the chat because I can see there's a few there as well, and we'll address as many of them as we can. Diana, back to you.
Okay, actually, Carol, there is a question here about hazards that might, I think it'd be a good question for you. We do a lot of work in northern New York, Michigan, Pennsylvania, near the Great Lakes. What hazards can we expect?
Well, I'm in South Carolina.
Yeah, that's true.
However, I know that after Hurricane Sandy, that the insurance companies started even considering problems of hurricanes even up farther up the coast. But now, as far as the Great Lakes and that area, I'm really not familiar. I, would assume. I'm not sure on that one.
Yeah, we
I
can
think we can look into that because I'm not familiar with that territory either.
Yeah. Okay, couple questions about named insureds. It was stated that the named insured should be the owner GC subs. Are you stating that a builder's risk policy allows entities that are not common majority owned to be listed together as named insureds? Yes, if they have insurable interest. Again, owner, GC, and subs should be named insureds. Can it always happen? Here's another question. Do builders risk underwriters push back on naming GCs and subs as named insureds? Sometimes they do. Sometimes, again, it depends on the policy form. Some of our carriers want to have one named insured, but then will name additional entities as additional named insureds. But yeah, the underwriters can push back. But we continue to push. So that's our job. Looks like we've got a question about carriers. Many carriers are declining to extend coverage if a project is not completed. That's a big thing going on right now, right? There were so many delays with COVID, with riots, with damage, lots going on. So sometimes carriers say, enough's enough. And won't give us the extensions that we need, but we always find a solution because you can't just stop your coverage. How do we address those up front? We try to negotiate when we're binding coverage, a pro rata extension period, meaning that if we're going to go over what we have bound, the term, we're going to ask upfront for 3 months or some type of extra leeway that the carrier will guarantee at the same price they will extend the policy. What about snow or ice? You guys want to take that? Insofar as, yeah.
It kind of depends what's the question about snow and ice. We have coverage under the builder's risk that's rain, sleet, and snow and ice damage. And what that is, that's if you're building a project and you've gotten the walls up, but you don't have the windows in yet, and there's an ice or a snowstorm, and some of that comes into your building because of the open windows. That would be considered rain, sleet, snow, or ice damage, and that would be insurable under the builder's risk policy. And that is something that we request from our carriers to provide on our quotes.
Mm-hmm.
Hope that answers the question.
Another question about, this is so timely. Why do quotes take so long? And why do you ask for so much? Well, Lori kind of hit on the market conditions. It's harder and harder these days to get our quotes back quickly. I would say as an average, a quote takes 7 to 10 days for a smaller project. But when we have, say, a huge frame residential apartment complex, we're looking at least 30 days. So what our job is to prepare the best submission to our underwriters that are going to write that project, so that when they're looking, and they're very, very busy, unfortunately, they don't work just for us. There are other agents trying to get their attention, but we want our submissions to be the very best so that they'll look at our requests and our projects first before anyone else's. And that's why it may seem like a hassle to provide all that information up front, but for us, it will ensure that the underwriter will look at ours and want to quote that right away and not go back and forth saying, oh, can I have the schedule? I didn't see the application. So, we're really working to tell a story about your risk and share all the information that we can get, right at the beginning. So they can't wait to send a quote to us. Right. One more question here. Sometimes I get a quote, sometimes I get an indication. What is the difference? A lot of times when you're, say, a GC and you're bidding you've got a bid and you need a quick number to plug into your quote, we're getting like the bid sheet or the bond request information. So we don't have a lot of information to go on. And again, we get as much as we can, but we ask for an indication so that you have a number. But an indication will always be conditional in getting more information back. We can't bind without an application. Underwriters are going to put on their indication what they'll need to make it a firm quote. A quote is usually something that we can bind right away when we get it from the carrier. But there might be subjectivities, like, we need to know if you want terrorism coverage, or we're going to need to have an updated schedule or budget. So that's why you'll see the difference.
Diana, there's a couple other questions in the chat now.
Oh, okay. Let me hop over. Oh, Carol, here's a question for you. What is named storm coverage?
Well, when we're talking about hurricanes, of course, those are windstorms that are named, and we all know I say we all know, you guys might not know out there, out here, when it's a large enough storm and there's certain parameters, it becomes a named storm it's given a name. So that's what I'm referring to when I'm referring to named storm when it comes to windstorm coverage. Otherwise, it's just a big thunderstorm.
Great. Okay, do subcontractors need to be named specifically in order to be named insureds? Would we need to provide a list of subcontractors? If we push hard enough, what we ask for is subcontractors of every tier, so that everyone is covered and you don't have to list out all of your subcontractors. Again, this varies by carrier to carrier. This is what we're always asking for, and we'll do everything to get it, because it is, the way to prevent a lot of headaches. So let's see.
So Diana, how does our typical named insured read then on the policies? What named insured do we advocate for on our policies?
On our policies, we are going to name our client first. So if our client is a GC, it would be GC, owner, subcontractors of every tier.
Thank you.
Let's see. Any other questions? Oh, can you briefly explain leg 2 and leg 3 coverage, sometimes required by lenders? Lori, I'm gonna lob this one over to you because you're so good at explaining it.
I don't know if I'm so good at explaining it. You're seeing leg 3 coverage, and I'm guessing it's probably on the bigger projects. And the leg 3 is the cost of correcting or making good of a loss. And so if your contractor had a lot, see, this is where I'm trying to get a good example. If there was a covered loss on the policy and the contractor needs to make that portion of their work good, and it's creating more time for them and it's costing them more effort, the leg 3 is really for the contractor to give them reimbursement for their time, materials, and labor that's outside of what was under the builder's risk. And they usually don't offer leg 3 on a builder's risk policy because this should be handled under the contractor's liability policy. So honestly, I haven't done much leg 3, but because we try to get it go back to the contractor's liability. And I understand that a lot of times you can't do that, especially with these bigger contractors out there. So we have a very limited market that handles leg 3 coverage.
Okay. I think we have wrapped up our questions. Anybody else have any other questions?
Diana, I do see a question that didn't get answered, and someone wanted to know what are some challenges you're seeing that are specific to a certain region or state. I can speak on a couple of the states I work with. Right now, California is having a really difficult time with earth movement coverage, especially in Central California. Carriers are very limited on the limits they will provide for earthquake or earth movement in that area. And then also in Washington State and in Portland, in Oregon. In Oregon, there's the city of Portland and Seattle, and then in Washington, there's the city of Seattle. You guys all may remember we had some riots back maybe a year ago or so. And due to those riots, a lot of carriers put moratoriums that they would not write business in either of those cities. Most of the carriers have come back and are okay with it, but we still have a few carriers where there are more moratoriums in place. And even some of them that drop their moratoriums, depending upon the crime score, they still may not write business in those 2 cities. And I'm assuming that could be the same for other states too, that might have had riots along when we did on the West Coast. But those are the 2 I specifically know about for that. So those are basically the big issues that I've been having in my current states.
Lori, wildfires, are we seeing any difficulties with
Excuse me.
wildfires?
Yes, and that is another good one. If you have any projects that are near the wildfires, and it doesn't even have to be in them, it can be a few 100 miles away from them. Carriers are taking a really good look at those too, especially when there's a wildfire already nearby. But even if there's not a wildfire going on, they're being very cautious, and if they're going to want to know what type of water supply you have, if you have, make sure there's active hydrants at the site, and make sure there's a local fire department nearby. So thanks for remembering that one, Charnel.
Yes, absolutely. If there are no further questions, then we're going to let you guys out of here a few minutes early. Thank you so much for joining our webinar. Please reach out to any one of us if you think of any further questions that you might want addressed. Also, please look for those upcoming webinars, specifically the pollution in October, and the other 2 will be coming in the next few months thereafter. Thank you again, and have a great day.